Welcome to another episode of Deep Dive into Real Estate by Team Luddy Dillon. This is the place where we simplify real estate for you, one topic at a time. Enjoy.
All right, everybody, welcome to another Deep Dive. Today we're going to be talking about refinancing.
Yeah, refinancing.
It seems like everyone's talking about it these days.
Absolutely. It's a hot topic. And, especially given all the changes in the market recently with interest rates going up and down like a yo-yo.
It's like trying to ride a roller coaster blindfolded. You just don't know what's coming next.
Exactly. And that's why we're here to shed some light on the whole refinancing mystery, help you understand what it is, why you might consider it, and of course, what are some of those potential pitfalls to watch out for.
Because let's be honest, refinancing, it can feel a bit like a maze, with all the jargon, the paperwork, the different loan options. It's easy to get lost.
It definitely can be overwhelming, and that's why we're bringing our expertise to the table. We're part of Luddy Dillon's real estate team here in the Peel region.
And we've been helping people navigate the world of real estate for a long time, since 2007, actually.
That's right. We've seen it all, the ups, the downs, the sideways moves, you name it.
So if you're thinking about buying, selling, or investing in real estate here in Brampton, Caledon, or Mississauga,
give Laddie a call. He's a wealth of knowledge and always happy to share his insights.
Yeah, his number is 905-598-0725. All right, so back to refinancing. What exactly is it, and why is everyone making such a fuss about it these days?
Well, think of it like this. You have this old mortgage, right? It's like that old comfy sweater you've had for years.
It's familiar, it served you well, but it might not be the most stylish or efficient option anymore.
And then along comes refinancing. It's like going shopping for a brand new sweater, maybe one with a better fit, a lower price tag, or even a snazzier color.
Exactly. Refinancing is basically swapping out your existing mortgage for a new one, potentially, with better terms, a lower interest rate, or even some extra cash in your pocket.
Sounds pretty tempting, right? I mean, who wouldn't want a better deal on their mortgage?
Yeah, lower monthly payments are definitely a big draw, but it's not the only reason people refinance. There's a whole buffet of potential benefits depending on your individual goals.
A buffet, you say? Now you're speaking my language. All right, so let's dive into that refinancing buffet. What are some of the tasty treats you might find there?
Well, for starters, you might be able to snag a lower interest rate, especially if rates have dropped since you first got your mortgage.
That's right. And a lower interest rate can translate into significant savings over the life of your loan.
I mean, think about all the things you could do with that extra money each month. Vacations, home improvements, that new gadget you've been eyeing.
Or you could even use those savings to pay off your mortgage faster.
Now that's a sweet idea, mortgage freedom sooner than you ever thought possible.
Another potential perk is switching from an adjustable rate mortgage to a fixed rate mortgage.
Yes. The adjustable rate mortgage, it's like a roller coaster of interest rates up and down. You never quite know where you'll end up.
Exactly. With a fixed rate mortgage, your interest rate stays the same for the entire term of the loan, giving you predictable payments and peace of mind.
It's like locking in that low price at the gas station before prices start to soar.
Now, speaking of peace of mind, refinancing can also help you streamline your finances if you have multiple loans, like a home equity line of credit or AGLOC.
Yeah, juggling multiple loans can feel like a circus act sometimes.
It definitely can. Refinancing allows you to consolidate those loans into a single mortgage, simplifying your payments and potentially getting a better interest rate overall.
So it's like taking all those juggling balls and turning them into one easy-to-handle bowling ball.
All right, so far so good. We've got lower payments, fixed rate stability, and streamlined finances. But wait, there's more.
Oh, I love when there's more. Tell me more.
One of the most exciting possibilities with refinancing is the cash out option.
Cash out refinancing, it sounds almost too good to be true. Tell me more about that.
Imagine this. You've built up some equity in your home over the years, right? That equity is like a hidden treasure chest just waiting to be unlocked.
And with cash out refinancing, you get to open that treasure chest.
Exactly. You refinance for more than what you currently owe on your mortgage, and you pocket the difference.
Wait, so it's like my house is an ATM.
You could say that, but just like with any ATM, you got to be careful not to overdraw your account.
Okay, good point. So cash out refinancing can be a powerful tool, but it's not a free-for-all money dispenser.
Precisely. It's important to use that cash wisely for things like home improvements, debt consolidation, or other major expenses.
Okay, I'm getting the picture. Refinancing. It's like a Swiss Army knife of financial options, lower payments, fixed rates, cash out possibilities. It's all there.
It's a versatile tool for sure, but just like with any tool, you got to know how to use it properly, and that's where things can get a little tricky.
Right, because there's a flip side to every coin. and refinancing is no exception.
Exactly. Behind all those shiny potential benefits, there are some potential downsides that you need to be aware of before you make any decisions.
Okay. I'm starting to get that feeling you get when you eat too much at a buffet.
Yeah.
At first, it's all delicious, and then you realize you might have overdone it.
That's a perfect analogy because just like that post-buffet regret, refinancing can have some consequences if you're not careful.
All right, so let's talk about those potential refinancing heartburns. What should I be watching out for?
Well, for starters, refinancing can restart your mortgage clock.
Wait, what does that even mean?
It's like you've been diligently working your way through that giant plate of food, and then suddenly someone comes along and refills it.
Ouch. So if I've already made a good dent in my current mortgage, refinancing could push back the day I'm finally debt-free.
Exactly. And remember, while a shorter-term loan helps you pay off your mortgage faster, those higher monthly payments can strain your budget if you're not prepared.
It's all about finding that sweet spot between paying it off quickly and keeping my bank account happy.
And speaking of keeping your finances happy, let's not forget about those closing costs.
Oh yeah, closing costs, those are like the hidden service charges at the buffet that can really add up.
They sure can. And speaking of hidden costs, if you're thinking about selling your home soon, refinancing might not be the best move.
Wait, why not?
Well, it might take a while to recoup those closing costs through interest savings. If you're planning to move in the near future, it might make more sense to just stick with your current mortgage.
So refinancing is more of a long-term play, assuming you'll be in your home for a while. Makes sense.
And here's another thing to consider. When you refinance, your home will likely be reappraised.
Reappraised? What's the big deal about that?
Well, if the housing market is going through a bit of a slump, there's a risk you could end up owing more on your mortgage than your home is currently worth.
Yikes.
Yeah.
So even if I'm getting a lower interest rate, it might not be enough to offset a drop in my home's value.
That's the risk. And remember, your credit score is like the VIP pass to the best refinancing deals. The higher your score, the better the interest rates you'll qualify for.
So if I haven't been the most responsible with my credit cards, that could come back to haunt me.
Unfortunately, yes. And lastly, let's circle back to that cash out refi we talked about earlier. While it can be tempting to tap into that home equity for extra cash, it's crucial to approach it with caution.
Okay, I'm sensing a don't go overboard at the dessert table analogy coming on, am I right?
You're catching on. Using your home as collateral for a big cash out refi can be risky, especially if you overspend and find yourself struggling to keep up with the payments.
Okay, I'm getting the message. Cash out refinancing can be a great option, but it's not for the faint of heart or the financially reckless.
Exactly. And remember, all of this is happening right here in our backyard, the Peel region. This is where we live, work, and of course help people navigate the exciting world of real estate.
And that's where Laddie, Tillin, and our team come in. We're not just talking about refinancing in a vacuum. We're talking about refinancing in the context of the specific market dynamics here in the Peel region.
Absolutely. Property values trends, even local pizza delivery options. It all plays a role.
Okay, maybe not the pizza delivery options, but I get your point. Local expertise matters.
It absolutely does. And Laddie's been a trusted guide in the Peel region real estate market since 2007. So before you make any decisions, give him a call at 905-598-0725.
He'll answer your questions, analyze your situation, and help you make the best choice for your individual needs.
Exactly. Remember, knowledge is power, especially when it comes to making big financial decisions like refinancing.
So before we wrap up part one, I want to leave our listeners with something to chew on. What are some of the key things to consider before diving headfirst into the refinancing buffet?
Great question. Stay tuned for part two, where we'll unpack the critical factors you need to weigh before you make that big decision. And trust me, you'll want to have a napkin handy for this part. All right, welcome back to the deep dive. We left you hanging there on the edge of your seat with that big question.
What are those key things to consider before taking that refinancing leap?
Exactly, because refinancing, it's not a one-size-fits-all kind of deal.
Right. It's got to be tailored to your individual situation, your goals, your financial comfort zone.
Absolutely. So let's break it down into bite-sized pieces, shall we?
This is good. I'm ready to digest some refinancing knowledge.
All right, first things first, you got to take a good hard look at your financial landscape.
Financial landscape sounds pretty grand.
Well, it's basically a fancy way of saying, what's your financial situation? What are your goals? What are your priorities?
Okay, so it's like taking inventory of my financial life before I go on a shopping spree.
Exactly. You wouldn't go grocery shopping on an empty stomach, right?
Definitely not. I'd end up buying the whole store.
So before you even think about refinancing, ask yourself some key questions.
Like what kind of questions?
Well, for starters, are you feeling the pinch of high monthly payments? Are you struggling to make ends meet?
Because if that's the case, refinancing to a lower interest rate or extending your loan term could give you some breathing room.
Exactly. It's like loosening your belt after a big meal. You just feel more comfortable.
But what if my priority is paying off my mortgage as quickly as possible?
Well, then a shorter term loan might be the way to go, even if it means higher monthly payments in the short term.
It's like choosing between the express lane and the scenic route. Both will get you to your destination, but the journey will be different.
Now, while you're contemplating your financial goals, don't forget to check your credit score.
Ah, yes, the credit score. It's like your financial report card.
Exactly. It tells lenders how responsible you've been with borrowing and repaying money in the past.
And the higher your score, the better the terms you'll qualify for.
It's like having a golden ticket to the best refinancing deals.
So if my credit score is looking a little rough around the edges, what can I do to improve it?
Well, there's several things you can do, like paying down debt on time, disputing any errors on your credit report.
It's like giving your financial report card a makeover.
And remember, a good credit score isn't just important for refinancing. It can also help you get better rates on car loans, credit cards, and other types of financing.
So it's like a financial superpower.
All right, so we've covered financial goals and credit score. What's next on our refinancing checklist?
Well, now that we have our financial ducks in a row, I guess it's time to start shopping for a new mortgage.
Exactly. But before you jump into the deep end of the mortgage pool, there are a few things to keep in mind.
Okay, like what?
Well, the interest rate is obviously the big one, but it's not the only factor to consider.
Right, because there's more to a mortgage than just the interest rate.
Exactly. You also want to pay close attention to the loan term closing costs and any other fees lurking in the fine print.
Okay, loan term closing costs fees. It's starting to sound like a math equation.
It kind of is, but don't worry, we'll break it down for you.
So loan term, that's how long I have to repay the loan, right?
Exactly. Typically, you'll see terms of 15 or 30 years for a mortgage.
And a shorter term usually means higher monthly payments, but you pay less interest overall.
While a longer term means lower monthly payments, but you pay more interest over the life of the loan.
Okay, so it's a balancing act between affordability and long-term savings.
Now let's talk about closing costs. Those are the fees associated with getting a new mortgage.
Closing costs, they're like the hidden toll booths on the refinancing highway.
They can definitely add up, so it's important to factor them into your overall cost analysis.
And closing costs can vary depending on the lender, the loan amount, and other factors.
Exactly. So it pays to shop around and compare offers from different lenders.
It's like comparing prices at different grocery stores. You want to make sure you're getting the best deal.
Now, beyond interest rate, loan term, and closing costs, there are a few other things to be aware of.
Okay, like what?
Well, some loans might have prepayment penalties, which means you'll have to pay a fee if you pay off your mortgage early.
That doesn't sound very fair.
Yeah, it can be a bummer. So always ask about prepayment penalties before you sign on the dotted line.
And what about those points you hear about sometimes?
Points are basically prepaid interest that you can pay upfront to lower your interest rate.
So it's like buying a discount on your interest rate.
Exactly. But you have to do the math and see if paying points actually makes financial sense for you.
Okay, so we're shopping for the best interest rate, the most favorable loan term, the lowest closing costs, and watching out for those sneaky fees.
It's like a financial obstacle course.
But wait, we're not done yet. There's one more crucial ingredient to consider.
Oh, yeah. What's that?
Your long-term plans. How long do you see yourself staying in your current home?
That's a great point, because if you're planning to move in the next few years, refinancing might not be the best move.
Right, because you might not have enough time to recoup those closing costs through interest savings before you sell.
It's like signing up for a year-long gym membership when you're only planning to work out for a month.
Not the most cost-effective strategy. And even if you're planning to stay put for a while, it's wise to consider the possibility of rising interest rates in the future.
Because those low rates we're seeing now might not last forever.
So even if rates are low right now, they might not stay that way forever. So how does that factor into the refinancing decision?
Well, if you have an adjustable rate mortgage, refinancing to a fixed rate mortgage could protect you from potential rate hikes down the road.
It's like buying flood insurance before the storm hits. You might not need it, but you'll be glad you have it if things get rough.
Exactly, and that's something you can discuss in detail with Laddie's team. They can help you analyze your specific situation, assess the potential risks and benefits, and make sure you're making a well-informed decision that aligns with your long-term goals.
So before you jump into refinancing, remember, Laddie's team is just a phone call away, ready to offer that expert guidance. They've been helping people in the Peel region navigate the real estate world for years, so, you're in good hands.
Absolutely. Give them a call at 905-598-0725, and they'll be happy to chat with you about your options and answer any questions you might have.
Okay, so we've mapped out the key considerations, but there's still one burning question. When does refinancing actually make sense? When is it the winning move, and when is it better to stick with your current mortgage?
That's the million-dollar question, and we'll be tackling it head-on in part 3. Get ready for some real-world examples and scenarios that'll help you make the right call for your unique situation.
Okay, so we've talked about all the ins and outs of refinancing, the pros, the cons, the things to watch out for, but now let's get down to brass tacks.
Yeah, when does refinancing actually make sense in the real world?
Exactly, because it's one thing to understand the theory, but it's another thing to apply it to your own unique situation.
Absolutely. So let's paint a picture. Shall we imagine you bought your home a few years ago when interest rates were sky high?
Okay, I'm picturing those mortgage payments must have been a real budget buster.
And now fast forward to today, interest rates have dropped significantly. They're practically doing the limbo.
So you're sitting there with your old high interest rate mortgage, feeling a little bit like you missed out on the party.
Exactly. And that's when refinancing starts to look mighty tempting.
Like a shiny beacon of financial hope.
Refinancing to a lower rate could save you a bundle over the life of your loan, free up some cash flow each month, and maybe even let you pay off your mortgage faster.
So in this scenario, refinancing seems like a no-brainer, right?
Well, not so fast. Remember those closing costs we talked about?
Oh yeah, those pesky fees. They're like the party crashers of the refinancing celebration.
Exactly. So you got to make sure the potential savings from a lower interest rate outweigh the upfront cost of refinancing.
Okay, so it's not just about snagging a lower rate. It's about making sure the numbers make sense for your specific situation.
Precisely. You got to do the math. Consider how long you plan to stay in your home, factor in those closing costs, and see if the overall financial picture is rosy.
So it's like planning a vacation. Got to weigh the cost of the flights, the hotel, the activities, and make sure it fits your budget.
All right, so we've covered the lower interest rate scenario. What about that cash out option? What does that make sense?
Yeah, cash out refinancing. It's like having a secret stash of money hidden in your home equity.
It definitely can feel that way, but just like with any secret stash, you got to be careful not to blow it all at once.
Okay, so cash out refinancing, it's not just a free pass to go on a spending spree.
No, it's a strategic tool that can be used for specific purposes like home improvements, debt consolidation, or other major expenses.
So it's like having a home renovation fund or a debt consolidation fund built right into your home equity.
Exactly. And when used wisely, cash out refinancing can help you achieve those financial goals faster.
Okay, so we've got lower interest rates and cash out possibilities.
Yeah.
What are some other situations where refinancing might be a smart move?
Well, if you have an adjustable rate mortgage and interest rates are on the rise, refinancing to a fixed rate mortgage can provide some much needed stability.
It's like trading in your roller coaster ticket for a relaxing Ferris wheel ride.
Exactly. With a fixed rate mortgage, you lock in your interest rate for the entire term of the loan, so you don't have to worry about those unpredictable rate hikes.
And that peace of mind can be priceless, especially in today's uncertain economic climate.
Another scenario where refinancing might be beneficial is if you've built up enough equity in your home to get rid of those pesky private mortgage insurance or PMI payments.
PMI. It's like that annoying telemarketer that keeps calling you during dinner.
Once you hit that 20% equity threshold, you can say goodbye to PMI and free up some extra cash each month.
So refinancing can be like a financial spring cleaning. You get rid of the clutter and streamline your payments.
Okay, so we've covered a few scenarios where refinancing might make sense, but remember, it's not a magic bullet. It's a decision that should be made carefully and thoughtfully.
And that's where our expertise comes in, right?
Absolutely. We're here to help you navigate the refinancing maze, answer your questions, and make sure you're making the best choice for your individual needs.
So if you're even thinking about refinancing, give Laddie a call at 905-598-0725. We'll sit down with you, crunch the numbers, and help you weigh the pros and cons.
We'll be your refinancing Sherpas, guiding you every step of the way.
And that's a wrap for this deep dive into refinancing. We hope you found it helpful, informative, and maybe even a little bit entertaining.
Remember, refinancing can be a powerful tool for achieving your financial goals, but it's essential to approach it with a clear understanding of the potential benefits and risks.
So do your research, ask questions, and don't be afraid to reach out to a trusted advisor like Laddie Tillen for guidance.
Thanks for tuning in, and we'll see you next time for another deep dive into the world of real estate.
Don't forget to subscribe to our channel. We will be back with something new and something interesting.